In our last video, we continued with our analysis of trend, and in particular, we looked at how trends end, and we looked at how when price approached the trend anchor, how we needed to see price acceptance below or above the trend anchor in order to see the trend begin to change. In today's video, we're going to continue our analysis of trend, and in particular, we're going to now look at trend change to ranging behavior. Now, before we do, we will just go over some of the objectives and learning outcomes, because it's important with trends, as they form such a key part of our analysis, that we begin to completely absorb this information. So the objectives and learning outcomes, we have provide an objective method to identify specific areas that indicate potential change or continuation of trend. So we looked at the anchor, and we also looked at the last swing high or swing low or last peak or trough in the uptrend or downtrend. We looked at providing an objective method to determine when a trend has changed, reversed, or changed to ranging behavior. And we looked at to provide methods to identify specific price action behavior that leads to trend change. Some important points here. So trend is the single most important principle Charles Dow developed and forms a key part of technical analysis. The trend should always be assumed to be in existence. The clear implication from Dow theory is that the analyst should always assume the current trend is still in effect until the opposite trend is definitely in place. So in adapting Newton's first law of motion, a body or a trend in motion tends to stay in motion unless compelled to change its state. We also looked at a couple of key principles. So we identified key anchors to the trend. We looked at determining price acceptance, and we saw areas where there was no price acceptance. And we're beginning to apply weight of evidence to our trend analysis. So in this video, we're going to look at how trends end, and in particular, we're going to look at how trends change to ranging behavior. So the trend as it develops is bounded by 2 points. So one of those is the anchor to the trend, uptrend or downtrend. So in the uptrend, the peak or swing high that has made the highest price. In the downtrend, the trough that has made the lowest price. So until price either breaks the peak in the uptrend or the trough in the downtrend by way of price acceptance, the price action should then be considered to be ranging. Let's have a look at a couple of examples. So here we have an uptrend example where prices come up into a peak, down to a trough, created a higher peak, higher trough. We have a break of the higher peak here, so our trend is continuing, and now we have our anchor in place. Prices pushed up, created a higher peak. Now prices pushed down, and it's attempted to break the anchor, but we don't see price acceptance below the trend anchor. Prices pushed up. It's given us a bit of a swing in here, but it hasn't penetrated the top boundary. So until such time as it either penetrates each of these range boundaries to the high, or the range boundary, or the anchor to the low, we need to consider that price action in here is ranging behavior. Let's have a look at a downtrend example. Prices push down into a trough, up into a peak, lower trough, lower peak. Price breaks through the lower trough. Continuing our downtrend, we now have our anchor to the downtrend across here. Price pushes down, creates a lower trough. Now we have an attempted Dow theory change of trend, or we have our complex pullback, but price just continues within this structure, bounded by our range boundary, which is the anchor, and our range boundary, which is the low trough at the bottom. So in between here, price is to be considered as ranging behavior. Let's have a look at some chart examples. So we have a peak or previous trough, peak, higher trough. We have our anchor now, it's able to be placed. Price pushes up. We can clearly see here that there is demand. We have a higher peak, we have a higher trough, and here we have our 3 swing retrace. And we can see below here is our invalid anchor. And we can see the price has attempted to break this swing. And we can see it's immediately rejected. And continues in this fashion. So not only do we not have price acceptance here as a little bit of an initial weight of evidence, we don't have price pushing down to the anchor here. So anything in between here is to be considered as ranging price action. Even if we did have price acceptance here, until price breaks the anchor down here, we still need to consider this as ranging price action. But if we did get a break and price acceptance here, according to our Dow theory terminology or method, we still need to see strength as well. So all that does is add weight of evidence to the possibility of trend change. But until such time as it breaks the anchor, they are just a couple of pieces to the puzzle. So we can see price has continued through, hasn't broken the range boundary either side. So price action is still ranging within this structure, bounded by the anchor and the range boundary here. Let's have a look at another example. This is a bit more volatile or whippy price action, but it still is price action. So there's a trough. We have a peak here. Now we don't have a trough here because we don't have the two higher lows. We have a peak here. Same here. We don't have two lower highs. So our next trough is actually here. So here's our trough, our peak, our trough here, our higher peak. Price is pushed down. We have our higher trough here. You can see some attempted peaks in here. But once again, we don't have lower highs. We do on this side, but not this side. So this is the peak here. Our higher trough is here. Price pushes up into the higher peak. Price pushes down without giving any swings in between. So this is similar to one of the examples where price pushed straight down into the anchor, but we have no price acceptance below. Price has gone sideways here, a few inside bars. Price has pushed back up. So not only do we have no price acceptance, but price now is still contained within these range boundaries. So here's our anchor, here's our top range boundary. So price is just continuing ranging behaviour. Now, I suggest that you have a look yourself on a few charts until you familiarise yourself with this method. So, in summary, we looked at trend analysis and the trend change to ranging behaviour. Now, in our next video, we're going to continue with trend analysis and how trends end. And in particular, we're going to look at examples of price acceptance. So thanks for watching, and I look forward to seeing you in our next video.